Hey everybody, how are you? Lawrence here with financialthing.com. You see Holly there in the background. Hang on. She is back with us after a quick trip to the vet. Couple of teeth pulled. She's still a little annoyed about it, but she's back. Sponsored by Cufflink, of course. Hope you guys are all having a wonderful week today. What is it, Thursday? Yeah, it's Thursday. We're back on Thursday. We're going to be talking a lot about peer-to-peer lending tonight. Some news. I'm going to be going through actually a pretty comprehensive list of the peer-to-peer companies that we often talk about in this stream. I got an email this week asking me a very specific question. I forgot to screenshot it. Apologies. But I'm going to go ahead and kind of address it tonight in the stream. And for anybody that's watching in the future, I think you're going to find this really helpful. Hopefully you will tonight also. Yeah, we're going to talk a little bit too about these interest rates and how they're really competing with peer-to-peer lending. I've gotten a couple of pieces of feedback from people who, generally are pretty long-term peer-to-peer lending holders who are saying, well, the interest rates now are just not really making the risk worth it. So we'll talk about that and some thoughts and feelings about that, and when do things become not worth it in the investment field when you have all this competition and these rates rising. That's something that's in the news a lot this week too. So anyway, don't forget the 28th, we're going to have Narinder from Cufflink here. Of course, one of the founders. He's going to be talking about what's going on at Cufflink. Cufflink is in the news this week, so put that on your calendar, 7:30 UK time, PM also. I don't know when the clocks change, I can't remember. But yeah, this stream is, of course, sponsored by our good friends over at Cufflink in Gravesend, in the beautiful town of Gravesend. If you've never been there, you should go check it out. It's not too bad. You can earn up to 9.83% gross interest per annum, well more than £250 million of UK property-backed investments made since 2016, and zero investor losses to date. It's not always going to be like that, but to date, zero investor losses. Capital is at risk. Don't invest unless you're prepared to lose money. Of course, this rate of interest can change as interest rates do fluctuate. You can join at the link in the description below or at join.cufflink.com/financial-thing. I think we're coming up on year 8. No, is it year 7 of Financial Thing, which started, I think, in the summer of or beginning of 2016. So would that be year 7? That would be year 6. My math, is that year 7? 6? No, 7. Yeah, year 7. So I've been going for a while. Hope to continue to be here to deliver some form of entertainment, hopefully some educational things that you can learn some things about. But yeah, please hit that thumbs up if you can. I really appreciate each and every one of you showing up every week to have a chat about this industry of peer-to-peer lending and other bits of general investing that we love and some of us hate. But yeah, we love and hate, right? We have mixed feelings sometimes about peer-to-peer, but this is what we do. Quick hi to everybody. Mark Mason. Hello, Mark. How are you? Nice to see you. Mike Powell, of course. A member of the Lendy M2 committee, so thank you for your service, Mike, and to you also, Mark, for your service in the Funding Secure, is it the Funding Secure, I think I got that right, action group. Chimpo Naughty is here. Darren, of course, Stephen Hailing, Nottingham, Dave Dawson is here. Peter Vince from Leatherhead, glorious day, just back from a visit to Beachy Head. Don't know what that is, but it sounds familiar. Robert Pates is in Hornchurch. Colin Perry in the Peak District. John Day is here. Greetings to you. Paul New in Stockport, happy to see you. And Gravesend is not too bad. It's one of those quaint little think it's in Essex, right? Is it Kent, maybe? It's a cute little town. And thank you to everybody who sent well wishes about my BFF, best friend here, Holly, who last week was having some medical stuff going on, and I received quite a few emails saying, oh, I hope she's doing well. It was really nice anyways, so unexpected, but thank you to everybody. I really do appreciate everything that you guys send me, and the Facebook group, and we have a good community of good like-minded people that support each other, and it's just really nice. I have my DJ Yoda shirt on tonight, but alas, let's get right into the news, and then we're going to talk. I'm going to show you some things too about what's going on in the peer-to-peer world. Here we go. Peer-to-peer under pressure as fixed-rate bonds pass 6%. Fixed-rate bonds are now paying more than 6% in interest to savers, heaping pressure on peer-to-peer lending platforms which are offering similar rates without financial services compensation scheme protection. NS&I is currently offering the top saving product on the market with a 1-year fixed bond paying 6.2% in interest. 2 other bonds are also offering returns in excess of 6%. My Community Bank, 18 months at 6.06. Forward Money has a listed 2-year fixed term bond at 6.05%. Well, so NS&I, it's a pretty good deal. One thing I do like about NS&I too, if you've never played around on your computer, you can hover over their logo and watch the little S bounce into the eye. It's quite satisfying. But I digress. Anyway, some of the things they've got on here, I'm not a big fan of the premium bonds. I've heard people, who watch my videos saying I invested money into premium bonds and it didn't go so well. That's my experience. I've heard other people have had better experiences than I have. All I can go is, off the history. Yes, it's tax-free. However, I did not receive anything close to this whatever rate they're offering at the time, which wasn't great. I think when I was doing it was about 1.5%. It's supposed to be better now, 4.65%. But I never hit the rate that the NS&I premium bonds promised after a year, so that was an exit. But if you go down, you can see on the income bonds they have 3.59%, and then on the fixed term, this one down here, which is what everybody seems to be going down towards, the 6.2% fixed for 1 year. Of course, it does come back with some drawbacks. Number one, you have to pay tax, of course, just like you do on peer-to-peer lending. But also your money's fixed for a year. So if interest rates do creep higher, which, we don't know what they're going to do with the interest rates, but if they do, you get stuck in the bond for a year. And also if you need liquidity, you can't get your money out. But you do have the fixed protection of the FSCS protection, which is a big deal to a lot of people for safety. Obviously, that does make a lot of sense. However, there are places that you can invest in peer-to-peer lending that is going to smash this 6.2% interest rate that NS&I is offering. Moving on, Unbolted and Abundance vow to keep low minimum investment thresholds. This is something else we're going to chat about also this evening, about the different companies and what their minimums actually are. I went through quite a lot of websites today for the companies that we talk about, and also some of the people that have been on the stream and the live Q&As. And sometimes it can be quite difficult to find out this information. It's somewhat buried. So I'm going to go through that too. But Unbolted and Abundance have really committed to keeping this minimum investment threshold low. We've seen a lot of companies raise that minimum. A lot of the times it's just due to the administration costs that come along with dealing with customers who are putting in small minimums. We have some companies that have kept their minimums low. Unbolted, which you can fund with as little as £1, is one of those. And Abundance now still maintains their minimum investment of £5. So for anybody out there that doesn't want to go for these high minimums, those are very attractive places to invest. We all know there are other places too that have low minimums, which again I'll cover in a little bit. Cufflink loan collections almost doubled in Q2. So, Cufflink is one of the sponsors of the stream, but I do report things that are happening with Cufflink. I think as Cufflink's loan volume increases, of course they're going to have higher collections. But it's also saying, what that means to me too is that they're actually managing to collect money back from the loans that are going into difficulty, which is actually a very positive thing. What you don't want to see is those defaults increasing with no more increase of money that's coming back from those defaulted loans. Now, will it always be like that? Who's to say, right? I mean, it depends on the borrower. But this is actually quite a somewhat positive piece of news. Cufflink almost doubled the volume of its loan collections during the second quarter of the year. Almost £16 million was collected during the second quarter, up from just under $9 million in the first 3 months of the year. Cufflink has predicted that loan collections will continue to rise, with $10.1 million collected during the month of August alone. By the end of the third quarter of the year, the platform expects loan collections to be in excess of $48 million for the year to date. Hiran Patel, who's been on the stream, go check that out if you haven't seen it. He's the chief risk officer, and he said the rise in collections is due to the implementation of a new loan book management system this year. That's to do with the risk side, and they're delighted with the success that they've seen so far. Prudent risk management is at the heart of what we do at Cufflink. We're always looking ahead to identify any potential challenges that might affect our borrowers' ability to repay their loans. So, yeah, there you go. Developers are urged to consider liquidity exit strategy. LendInvestor said that property developers need to consider the liquidity of their exit strategy in the current market and choose flexible financing options. The specialist property lender noted that sales liquidity has remained relatively robust in recent years due to the imbalance between demand and supply. However, interest rates have started to cool the property market. Since interest rates have gone up, you can obviously see the effect this is having on property sales. I've definitely seen it here in the U.S. Things really cooled down, and we've got interest rates that are on fixed loans now over 7.12. I've seen them go as high as 7.5%. That's obviously going to place a cooling on the property market. And as developers borrow money from peer-to-peer lending platforms, the big challenge for them is if they build something and they just are unable to sell it for what they need to get back out of it, and it sits on the market for a while. Well, obviously that affects us as peer-to-peer lending investors, because that can really put a slowdown on how quickly, if at all, that money gets repaid on those loans. So LendInvest is a very big lender. They have a several billion pound total in what they've lent out to people, a really big loan book. And they're really urging that developers do consider liquidity of exit strategy, meaning how they're able to sell the properties that they're building, how they're going to do that as maybe demand starts to cool off in high interest rate environments. This is an email that I got, speaking about those interest rate increases. You can now get 4.6% in Saga. Most of the major banks that are offering interest rates on their savings accounts that are attractive are sort of hovering, but they've jumped up quite a lot. We've seen, rates of Ford money of about 4.5%. Now Saga is offering 4.6%. That is including a bonus rate of 0.34% that's fixed for 12 months. So you can get some decent deals on instant access savings account. We've also seen companies like LoanPad increase their interest rates now up to 6.3% premium, 5.5%. Now, I still think that 5.5% for what LoanPad offers on a classic account is somewhat attractive. just based on their history of being able to offer that liquidity, also paying out interest daily is a really, really nice factor that you're not going to get with a bank account. But of course, there is additional risk that you take when you invest through a company like LoanPad. And there's a significant difference between 5.5 or even 6.3% and whatever Saga is offering at 4.5%. Yeah, so it's still a 1%. Is that going to make a huge difference in the grand scheme of things? Probably not to most people, but over time, over multiple years, it does make a difference. Okay, so I got an email this week from a guy, and apologies for not screenshotting it. I usually do screenshot the mailbag, but basically he said he's kind of new to peer-to-peer lending, and he just wants some basic information about what the current interest rate projected returns are for peer-to-peer lending companies, to some of the most popular ones, and how much does he have to put in as a minimum. So I thought it'd be fun for me to go through the companies and hopefully informative and just kind of look and see what they're offering right now. What's the minimum investment amounts? What's the interest rates that you could expect to receive from those different companies? And then also, if I have time, which probably will, is I wanted to go online and just see kind of what the general feedback recently from people is on these platforms. I always like, even though I find reviews can be somewhat murky because you never really know who's writing them. You don't know if they're authentic. But I always like to go onto Google and just kind of read the latest reviews. Sometimes you'll have from a borrowing side and sometimes from an investor side, and just kind of see what the general feedback is and see if that kind of follows what I feel about those companies. Because I think you really need to keep an eye on these peer-to-peer lending companies, because they're not always going to do what they say they're going to do, and they don't always perform the way that we hope they perform. And it really, you could take Assets Capital as a good example, right? They sure talked a good game, but at the end of the day, they shut down a retail, and a lot of us have still got money tied up in Assets Capital that we don't know when that is coming back. I don't want to say if it's coming back, because I look on the bright side with Assets Capital, even though I'm not really happy with them, but more of a case of when that money is coming back. So that changed, that situation over Assets Capital changed pretty quickly. We had certain people over there saying, "Oh, we're committed to retail lending, everything is all good," and then we turn around and everything changes. So I think it's good to really keep an eye on these companies and don't sort of sit on the laurels that just because a company has been doing well for us over the last few years that they're going to continue to do that. You are hopeful that they will, but there really is no guarantee. So that being said, today we are going to look at, hang on, let me pull it up, present a view. This is good stuff. Hang on. Peer-to-peer lending, investment minimums and returns of September 2023. Now, if you are new to peer-to-peer lending, which I know a lot of people that tune in on the stream are not, you guys are well-versed in what peer-to-peer lending is. For anybody out there who's watching who doesn't understand when I speak about returns, it's always gross. So that means gross is before tax, which you have to pay. And then it is always per year. So this is, unless it specifically says per month, nearly all of these cases, all of these companies are going to be what you could expect to earn per year. Now, some of them have different products. Obviously, that you can decide what you want. Like LoanPad, for instance, has Classic and Premier. And Cufflink, for example, has Auto Invest and Self-Select. So just depends what you pick. But let's go ahead and take a look at most of the companies we speak about on the stream. Let's talk about Assets Exchange, which is of course a property-backed, also doing landlord for community-based schemes. Like they assist a lot of people that need housing through other third-party companies who offer housing to people, say, with disabilities or things like that. It's a pretty cool program they have going on. Unfortunately, they've picked up this assets name, which is unfortunate considering what's going on with assets capital. With them, you can earn up to 6.5% per annum. And I do say up to because some of the investments obviously differ. They have certain deals that are in the 5% range. I've seen some up to 6.4, 6.5%. But one of the good things and positive things about Assets Exchange is that one of the companies still offers this very, very low minimum of just £1. So Peter Reed has been on the stream from Assets Exchange. He's the founder over there, so you can check him out if you want to get some more information about them. And this list, by the way, goes in alphabetical order. It's not based on who I think is good or think is bad, just alphabetic, totally non-biased. Next up, we have Axia Funding. This is a litigation company. Basically, people as investors fund litigation suits. And if you win, or if the law firm wins the suit, you get paid back a return, and they can be really, really healthy returns. If the legal company, the law firm, loses, you generally get zero back. So there is a bit of a gambling aspect to it, even though it is well vetted. Axia Funder does vet the litigation cases. So £1,000 minimum on each investment. Now, if you were to spread your money, if you took, say, 10K and spread it over 10 different litigation suits and you had an 80% success rate, you're going to do pretty well. Problem with this type of investment is if you have a smaller amount that you're trying to invest, say, 1,000 or 2,000, and you bet the wrong horses when it comes to these legal litigation cases, you're probably going to have a much lower return. And worst comes to worst, you back the two losers, you may end up with zero. So I would say if you don't have a bigger amount to invest through Axia, you do have to be very aware that you could absolutely get 0% out of that if the ones you back don't win. Moving along, we got Blend Network, Jan over there at Blend, who's definitely a friend of the stream. This is a property-backed peer-to-peer lending company. They do a lot of outside of London properties like Northern England, Ireland, and they've been doing really well. They're steady. You can get up to 12% through Blend. Again, £1,000 minimum, so sometimes this is out of reach. Some people don't want to put that much into a new lending platform, but I think the best way to handle it when these minimums are higher is just to try it out. If you have the funds, take a couple of thousand and just put in a couple of loans and see what happens. Blend does have a really good track record and historically has been doing really well. And to get up to 12%, if we talk about interest rates where they are now and saying, well, we can get 6% in NS&I, yes, I mean 6% is not bad in these interest rate environments, but being able to take that extra risk and get up to 12%, that's double, and that's a pretty significant amount if you look at it over an extended long period of time. Of course, some of the downsides of Blend is that these loans tend to fill up pretty quickly, and a lot of people complain they just can't get into them. They're not huge loans. In some cases, they can be smaller loans in the couple, 200,000, 300,000, 400,000 range. So if £1,000 minimum, you got other investors who are putting much more than 1,000 in, so it becomes difficult. And that's one of the things I hear about Blend, but I still think it's a pretty attractive option if you can get the loans. And there you go. Next, Capital Stack, is of course we had them on the stream. This is property backed lending, very interesting. They work with banks and take second positions working with the banks. It's an interesting average returns. This is investor average returns, what they advertise, 14.06% per year, which is very, very good. One of the downsides of Capital Stack is you got to put in a 2,500 minimum. That's their current minimum amount, according to their website. But it's definitely an attractive product. has one that's piqued my interest. I think, again, you need to have a minimum of 10 grand to put in there if you're going to try to have some kind of diversification. If you're just going in there and grabbing one loan, something goes wrong with that loan, that can be a pretty risky proposition, but you are taking some risks to get that average investor return. That return, by the way, can be much higher. But that is what average right now, what they list as investors receiving. Crowd Property, another UK property-backed platform. By the way, all of these companies are UK-based for anybody watching in the US. These are United Kingdom-based properties. They are advertising up to 10.5% per year, a little bit lower minimum of £500. Generally, the feedback on Crowd Property has been pretty favorable. One thing I will say is I did look at their Google reviews, and we'll pull those up in a bit, and there is some mixed feedback on Crowd Property, so I'm interested to know what you think, what your experience has been like. Mine has been pretty good with them. I'm using the Auto Invest product. I don't have a ton invested through Crowd Property, but it's been steadily kind of growing, but I do hear some people saying, I'm not so happy with them at the moment. Moving on, Easy Money, another property-backed lender. You see the theme here. You can get up to 7.26% per year. Caveat being, in order to get 7.26, you got to put in 100 grand or more, which basically, for most of us, you're not going to reach 100,000 or more in one peer-to-peer lending company. That's majorly high risk. But for high net worth investors, you can't get up to that amount. For most of us, I think we're going to be in this 5.28% return, which you can get for £100 minimum. And then a few people that have emailed me are in this 20,000 to 99,999 pounds, 6.27%. I don't see a real advantage of having to put in that much, 20K, to get 6.27%, when again, you could do it in NSI with zero risk for almost that same amount. So I'm not really seeing the value proposition there. The 100 minimum I think is okay to have liquidity of being able to access if you can. Of course, conditions have to prevail for you to be able to get your money out. But this middle tier, I just don't really see, and even the 100 grand plus, I'm just not sure I would want to be taking that kind of risk for 7.2%, having to put in 100K. Again, depends on your financial situation. If you have 10 million in the bank, 100K is nothing, so you can go ahead and take that risk. Folk to Folk Property, they are offering up to 11.5% per year is what you can expect to earn on them. Of course, we've had Roy on the stream from Folk to Folk. We had a really good stream and Q&A session with them. The biggest problem with Folk to Folk is 25,000 minimum. Again, it's sort of outside of my pocketbook range, but they do have very good feedback online for those higher net worth individuals. They seem to be doing a really good job. Cufflink, of course, property backed, we all know. Auto select, you can get up to 9.83%. This is, again, all gross. This is before tax. And then self select up to 9.71% per year. Of course, Cufflink, as I said, Cufflink now with their auto select product is only offering 1, 2, and 3 year. Before they used to offer, I think, 1, 3, 5. So I think 5 year just didn't really make any sense. But 3 years is not too bad at 9.83%. But myself preferring to go the self-select route, just for liquidity purposes and being able to sell on the secondary market is a nice feature with them. Of course, they did put their minimums up, which has been people's biggest gripes about Cufflink. That now new investor minimum has gone up to £1,000 on the first loan, with a £500 loan per loan investment after your first investment. I do wish that the new investor amount would have said, well, 1,000, minimum, but you could put it into 2 loans. I don't really like the fact you have to put 1,000 into 1 loan, but that's what they decided to do. Moving on, we got Landlord Invest. Philippe has been on this stream before if you want to learn more about them. They're a property also backed peer-to-peer UK lender. offering up to 12% per year, £1,000 minimum. I don't really know much about Landlord Invest other than having Philip on the stream. Obviously, I know what you guys know. I have no experience investing through this platform, but I haven't heard anything bad particularly. They just seem to be plodding along, and those advertised per year interest rates are pretty juicy at 12%. Lendwise, again, another stream person who was on is Lendwise, and they did student loans. This is very interesting to me. It's kind of a niche peer-to-peer lending side that we don't really see much of these niche. Most of these companies are doing property. They're offering up to 9% a year, £1,000 minimum. Basically, they offer student loans to graduate students, so people taking their master's degrees and higher, things like PhDs. So just an interesting niche. Again, not a company I personally invest through yet, but open to it in the future. We have our good friends over at LoanPad Property Backed Investing. Of course, we talk about LoanPad quite a lot because I do consider it to be one of the lowest risk peer-to-peer lending products out there. You can get up to 6.3% on the premium 60-day access, and the classic daily access account, of course, conditions must apply for it to be liquid, but you can get 5.5% return. It's nice to see those rates bump up the way they did. They went up, I think, 0.3% on September 11th. And normally it would be difficult to really say, when you can get 6.2 on a one-year bond to get 5.5% with the risk involved might not be a good option. However, with the daily access the way it is at the moment, I think I might have spelled classic wrong. But anyway, daily access being, I think for some people, being able to get interest daily is a big deal. People that want income. You just don't get that anywhere else. And also, I forgot to put that on here, but they have a low minimum of just £10. So very, very good when it comes to if you want to try out the platform. You're not having to put in £1,000, £500, 25,000. You can try out the platform for £10. That's what I did when I first started. I think I put in 100 and just saw how things worked and waited till I felt comfortable to put more in. But for a £10 minimum, being able to get that daily access rate, I think it's still attractive. But I personally use the premium 60-day access just to get that higher bump in interest rate. Been with them since 2019, so we're talking about 4 years now, and absolutely no issues. Propland, another property dealing generally in commercial property. Brian over there has been on the stream a couple of times, up to 12% a year. I've heard a lot of good things about Propland. I think they're very experienced and they know what they're doing. As my dad always used to say, stick to what you know. They stick to what they know. £1,000 minimum on that one, again, makes it a little more challenging for people to just want to try out the platform with the 1,000 minimum, but a good option. And we got Shojin. We had Jatin, of course, on the stream before. That's another property-backed peer-to-peer lending company. Some pretty high returns with them. You got 24% plus per year. So they have three different types of investments: equity, mezzanine, and senior debt. I don't know why I didn't write the minimum on that one either, but apparently I didn't. But yeah, senior debt obviously is the one we're most used to. You can get up to 12%. That's basically the first charge position on lending. And Jatin, actually, when he came on the stream, he made a really good point about senior debt. And he said usually when somebody who's looking for a peer-to-peer lending loan comes to a peer-to-peer lending company for their property development, there tends to be something about that deal that a regular lender doesn't like or doesn't want. So there can be quite a lot of risk involved with that peer-to-peer loan. But they do vet those loans. They offer up to 12%. Mezzanine, of course, is the junior position, so you are taking much more risk with a second position loan. In my opinion, you can get up to 24% with Shojin on a mezzanine loan, which is really high. And then equity positions, that's where people take, a profit sharing stint on the loan itself, and they advertise 24% plus. Risk wise, I think you're taking more risk in an equity position. There's a lot of unknowns about how that deal is going to work out in the end, how long it takes to finish, what the actual expenses on the development side of things are, purchase costs and acquisition. If there's any problems along the way, equity can be way more profitable. It also has, I believe, in my opinion, way more risk. And I don't know what the Shojin minimum is. I completely forgot. Maybe somebody can tell me. We got the money platform, consumer loans. This is interesting. They offer up to 0.8% per day, £250. We had the money platform also on the stream, did a Q&A. This is generally more churn lending. The loans don't tend to last such a long time, which is really good for liquidity, because if these are short-term, more consumer loans, you can get your money out when you need to on a much shorter basis. Good thing is you got a £250 minimum. If you want to try out the money platform, you can do that with a lower cost entry, which I think is a positive thing. And the revolving liquidity of loans paying back with the money platform could definitely be seen as an advantage. I personally do not invest through the money platform loans. Haven't done it yet. And we got Unbolted. Pawnbroking. They've been on the stream a couple of times. We had them very recently. If you want to learn more, they also do business loans, but they generally tend to be more gold, collectibles, and things like that. And the thing I like about Unbolted is, they're able to, if a borrower goes into default, they tend to be able to get those loans sold within 30 to 45 days, which is very quick. If you compare that to property, it's going to take a lot longer. They offer up to 10.2% per year. And one of the big pluses of Unbolted is they, again, are sticking by this £1 minimum. So you try out the platform for just a small investment, get your feet wet, see what you think. Yeah, so I'm going to write a list of all of these and post it up on the description under here on the YouTube videos. If you don't want to go through and watch that, and you just want to, see a list of all of these current rates. They do change, so again, keep that in mind. These rates are changing all the time. Sometimes the minimum changes, but I don't know that I missed anybody. Maybe I missed a couple of other P2P lenders that you guys like. I think Just Does was one that I did not add on there, but I thought that tends to be a really good overview of the ones that we kind of study on this within the community and on the stream. It gets a little bit confusing if you have to go to the website and try to figure out these minimums yourself. Sometimes they're deeply buried. Some of the companies don't even advertise what their projected interest returns are, funnily enough. Sometimes you have to look in the FAQs or in their terms and conditions, so that's why I thought to do it on that. So if we go and take a look at Mr. Google, I wanted to just kind of go through and very quickly see how these companies are faring in their public view. So let's start off with Cufflink. 4.3 out of 5 stars. And again, sometimes you have to take these reviews with a grain of salt, okay? Because people get salty. A lot of people don't come and write reviews when they're having good experiences. They only come with bad experiences. So you can see the first one here is 5 stars, and we have a 1 star. Horrible experience in customer service. Don't invest in this morally bankrupt, understaffed, rude firm. Okay, that's not good. Dobrian just put a 1 star, didn't really say why. We got Richard McDougall, who I believe comes on the stream. He says, very well done regarding a slight problem that occurred. Totally fixed with Invest Again. Top marks to Molly. Katie, 5 stars. Alex with 1 star. So some mixed feedback, but overall, most people seem to be pretty happy with them. Let's go to LoanPad. Only 4 reviews for LoanPad, which I'm surprised. They have a 5 star. Everybody's really happy. This guy says, when COVID struck, all the companies froze the withdrawals, but LoanPad handled the matter with rapidity and profession. I don't know what that means. I feel confident using them. That was a month ago. I visited the offices as part of my due diligence. My experience in there and using the platform has given me a real great deal of confidence. That's a good thing to do, by the way. If you are not going out and doing your due diligence on the companies you're investing in, I think it's a good idea to do it. There's Richard McDougall again with another 5 star. Easy Money, 4.3 out of 5. 21 reviews. Look at the newest. Great platform to invest in. That was 6 months ago. We got Giuliani M. This is very poor from Easy Money. They let you deposit your money into their ISA and then tell you that it can take up to 7 days to get the funds invested. Welcome to P2P lending. Sometimes it takes a while. Ann Cook is happy she chose Easy Money. Jeff Evans has had an account for 6 months. Can't fault it so far. Looks like some Russian person that I can't read has had money deducted from a card. I don't know what they're talking about. They don't have any cards, so I think that's a mistake. But they have pretty good feedback. Unbolted, 3 stars. They've only got 2 reviews, so this person seems like a borrower. A borrower said they lost the gemological certificate, but didn't lose the ring that it relates to, so he got mad. They investigated the claim in 2019. There's no evidence they lost the certificate. In the end, the customer confirmed by email that they were satisfied. This is the problem with the Google reviews again. You don't really know what's true and what's not, but that's all we have to look at, right? We can look at Trustpilot too, but I like Google. Anita is very happy with the service. Blend Network, only 6 reviews, 4.3 stars. Satisfied. Let's go look at a bad one. 2 years ago, called today with the intent of investing. Staff had no clue as to the purpose of the business. Rude, incompetent, poorly trained. Not sure I believe that. Propland, 5 stars, 2 reviews. People seem to be happy with them. Assets Exchange, 5 stars, 2 reviews. Happiness. Folk to Folk actually has the best feedback of any of the companies I look back online from the amount of reviews they have. Folk to Folk are diligent in assessing the risks of all borrowers and that they offer up to investors, while no investment of this nature is ever low risk. They ensure sufficient security that in the event of a default recovery, the majority of your investment recovery is highly likely. So really, really good feedback. Probably higher net worth individuals. Again, you got to put in quite a lot to get into this company, but they have the best. Except this Louise Robinson, who says they would give it 0 stars if she could. Totally unscrupulous in doing business. All they want is to obtain fees for doing nothing. Stay away from them. She wouldn't touch them with a 9-foot or 10-foot pole. That's too bad. Shojin, 4.4 out of 14. Generally seems pretty positive, except this one. This guy says he bought one of the luxury apartments. Horrible communal areas. And that's kind of weird. They haven't had a review, though, for 3 years, so it's kind of old reviews. Capital Stackers does not have, for some reason, a review page. And then we got the Money Platform, 4.0 out of 5. Great returns on an easy-to-use system. Matthew Stilto says, poor company. A fintech platform providing good credit solutions for millennials from Kevin Allen. Kevin Allen. That sounds very familiar. think he may work for the company, but I don't know for sure. Anyway, landlord invests 4.4 out of 7. Sorry, 4.4 out of 5. Not really much feedback, but what they have is good, but it's pretty old. So generally, I mean, if you probably averaged all of that out, probably hits about 3, no, probably about 4 stars out of 5 in general. Crowd Properties seems to have some reviews that are not as good, but they're a little bit lower on the scale. But in the most part, I think, you know, any financial investment company is going to have some reviews that are a little bit negative. When you're talking about people's money, it's a very, very, very sore subject. It's very tricky. I've even gotten people that have emailed me and yelled at me about the stuff that I have said and how I've caused them huge amounts of distress. So being on the other side of that, and I'm just a person that provides information. But I know what these companies go through when they get feedback from customers. It can be quite severe. And again, a lot of the people that have had good experiences with these companies don't post reviews. Generally, that's the way it goes. It's the ones that have bad experiences. They want the world to know about it, and they tend to go ahead and post. So anyway, I hope you found that information helpful today for you. We've been going for a little bit tonight, so just take a look at, let's look at assets capital, by the way. That's a good point. I don't really talk about them much anymore, but I do want to see what their reviews are like. I think it's going to be bad. What do you think? Oh, look at this. 2.9 stars. I'm surprised it's not worse, to be honest. But let's see the newest review. Scam company. Happy to take money when the going was good, but as soon as interest rates increase, they pull back the drawbridge. Can't get access to my money. Utterly despicable. Disgrace. Then you got some people that like them. Yeah, so I'm surprised there aren't more reviews on her about assets considering what's happened. There you go. Oh, and for anyone that's interested, since we got a few minutes left, let's take a look at the Trading 212 portfolio. With this lethargic stock market that is completely bipolar, it doesn't seem to know what it wants. I haven't checked in a couple of days. Not expecting much. See what we got. Oh, we're okay. For anybody that's following along. We're almost up to 18. Were we at 18K? I think we were at 17.6 last week. So 17.9, 17,927. Gosh, this Creative Realities is just... Oh, we have an IPO alert. Yeah, chip. The chip designer went live today. There's a lot of talk about this. Went live at, I think, 50 was the IPO. Went all the way up to 61. So if you were one of the lucky ones that were able to get in the IPO price, you can make yourself 8%. But yeah, Craig's not doing so good. Everything just seems to be muddling along. Not really up to much. Calera, still 70% in the green. So that's really the one that's keeping the portfolio afloat. It's just very lethargic. These markets right now, I tell you, just seem to be doing not much at all. One day they're up, one day they're down. There's really no stability. Yeah, so Trading 212 portfolio doing okay. I'll be happy to see it come back over 18K. See if you have any interesting comments. Invest 22. Hi, Annabelle from Spain. How are you? Saga, same as Marcus. Yep. Assets capital paid out more cash from the AA. I don't know why that's so small. That looks weird. Let me fix that. That looks so different. Yeah. Assets capital paid out more cash from the AA accounts today. That's good. Mr. Helium's happy with both Assets Exchange and Axia. Dave Dawson, blend is pretty good so far, just not many loans. You have to leave your money in there waiting. That's one of the problems. Crowd Property do let you do $50 via auto lend, which works well. I think you got to put in a 500 to start though, Dave. Yeah, didn't do investment fund. Elfin Marketplace. Interesting. Why no mention of CrowdStacker? Just not really ones that we talk about much on the stream. Haven't had any of them on the stream as guests, so I tend to stick to the ones I know more about, to be honest. I just don't know anything about those. Maybe we'll do a round 2 of all the ones that I didn't talk about next week. LoanPad and PropLend Class Act. I like LendWise. 5,000 minimum on Shojin. Thank you, CashPap. That was a piece of important information I missed out on. Relendex, yes, sir, another one. Rebs. Yeah, this is another problem, right? There's so many companies out there that you can't really. It would be hard as a lender to lend to them all. I remember when I first started, I had 20. I was doing 20 different companies, and it just became so overwhelming. I just had enough of it, and I became quite obsessed with logging in and checking these companies because there was a part of me that was also wanted to make sure that my money was still there. But there comes a point where you just can't manage financially. Number one, for most of us, we just don't have the finances to be investing through 20 different peer-to-peer lenders, especially with the minimums, and also the time that it takes to manage, and just even pulling tax forms at the end of the year and figuring all that stuff out. It just becomes so inconvenient to do that. I think it's better to have a reasonable amount of companies that you can really, really keep a good eye on and not dilute yourself too much. I think most people tend to do between 4 to 7. Unbolted default, sale of assets can take a lot longer than a month. Some go to auction, can take up to a year. Yeah, there are some that go longer, but in my experience, I've seen many of the loans that I got invested in that went to default were pretty quickly liquidated. Yeah, Mike, I think Kevin Allen is Weston Kev. Yeah, I don't like it when companies that have employees write Google reviews. I think that's a really bad look for them. It's unfortunate. Sorry, I'll put the mic down. Anyway, I gotta go. It's 3:25 here in the US. I have an appointment, but we'll be back next Thursday. And don't forget the 28th. Bring your questions for Narendra at Cufflink. Try to be nice. And of course, you're welcome to ask anything you want. He may not answer all the questions, but I encourage him to do that. But we'll see you next Thursday. I'll be back, and thanks again for joining. You have a wonderful weekend, everybody. Enjoy it's coming to the end of the British summer, if you can call it that. So I'll be glad to see you next week again. Thank you so much for coming and supporting the stream. It really means a lot. Have a nice weekend. That is all I have for you. I will see you next time. Take care. Bye.